Hello, 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 everyone. How is everyone doing? Happy Hump Day Wednesday. Good morning, Jacob. Good morning, Patrick. Good morning, John. Good morning, Eric. Good morning, Eric. Eric and Eric back to back. Again, we're still having people filter in this morning. Did anybody catch, I know Sterling did, who's not here yet, but did anybody else catch Futures Edge live yesterday? Let me know in the comments if you did and what you thought. First, so now there's no delays. You get Jim, Bob's, and my thoughts on what's going on in the market once a month in a live format. So if you didn't watch it, it's still up on X. It's still up. So, and it'll probably be on YouTube soon. So, where's the post-market show on YouTube? I caught it on X. It's not my channel. That is Bob and Jim's Future Edge channel. I know it's live streamed to X. I don't know if they have it live streaming to YouTube yet, but I know probably the recording will go up there. You'll have to ask them about it. Just reach out to ask them on X. Reach out to them. So, but again, that's where we sit right now. I hope some people got to tune in. I'm still looking for some more comments, but they're slow. Good morning, Anissa. All right, what do we got going on? We already had the mortgage stuff come out. Mortgage rates dropping a bit because the 10-year's been dropping in yield. ADP employment change, it was a very weak print. I don't pay much attention to it, but it was a very weak print. Good morning, Bull Strike Cheetah. Hello, Charles. So, cover a lot of stuff on there. Some of the stuff overlaps with the regulars who tune into this show every day. Good morning, McRangers. Just like McRangers, and now Bull Strike Cheetah tuning in. Heinrich, another regular here, and I appreciate everyone who tunes in. Again, if you're hiding in the background, there's more and more people hiding in the background. Jump into the chat if you're on YouTube. More important today, well, there's a couple important things. Again, they're hinting at another Canada-Mexico announcement today. Maybe he's going to change tariffs or eliminate. Who knows? Again, if the tariffs get reduced on Canada and Mexico, or they get eliminated on Canada and Mexico, we can probably see a rip-your-face-off rally. ISM numbers are coming out at 10 a.m. Eastern. Pay attention again. Prices and employment are very key. We did some little stagflation talk yesterday on Futures Edge. Sorry, I thought today was your day off, Sterling. Isn't it Wednesday? It's okay, though. Thank you. Good morning, David. All right. So the big things to watch for the ISM services, especially prices and employment. But it's sort of a quiet day. We got EIA numbers for the crude traders, and then we got the Fed's beige book coming out. So some decent reading this afternoon. And then remember, we have key stuff tomorrow, and Friday's non-farm payroll. Don't forget about that. Markets this morning, mega caps are slightly firmer, but not strong. You have consumer defensive still getting sold. Energy is getting sold with the crude breakdown. Groups, consumer defensive is the weakest. Energy is still negative. Basic materials, consumer cyclical, and technology are leading. Fed watch has really changed now. We are having a cut priced in for May, and then another cut for July, and then another cut for October. So back to 3 cuts, aggressive cutting cycle. Like the economy is going to go into a significant recession. So we will see about that. We're still in extreme fear. So again, I watch for the rip your face off rallies. Schiller PE, even with this pullback, still above 36. I mean, we need to get this thing down to levels, around 20 before it's all said and done. Will we eventually get there? We shall see. In earnings, nothing. Nothing that's market moving. Nothing that I'm interested in. So, the only minor things this afternoon is maybe Zscaler tomorrow. I mean, you got Kroger ruining grocery stores, U.S. wide. Tomorrow after the close, though, we got Broadcom and Costco. Tomorrow after the close are some market moving things. All right. Good morning, Ted. In the middle of a move, not a smart idea to plan a move in February if you want to do intraday trading, apparently. Well, again, the moves. I did a move in February. I moved to the new location, the new Bat Cave. So, hey, Richard. Again, if you have other things going on, don't try to day trade. The other things take precedence. You know, you don't have to do something. Now, what am I looking for? Besides, we still have, again, we're watching this on a weekly to see if this triggers. Not so sure it will, but we'll have to get till Friday. Today, this isn't official yet. We don't have an official double bottom. It has to trade below 57.77 at least. That's what I'll be watching for if we trade below and then get some kind of flush out move. Now, I can't put it on yet. I'll just show you. Let's say this did, and what I will be looking at then is a reaction. And again, these we don't know if the low's in yet, but then if we get above the 62.5 and this key resistance base, that could potentially be a front run pattern, although I have to keep wider stops because of the volatility. And remember, Trump announcement this afternoon. So I'm really watching to see if we set up a double. If we don't set up a double, I'm going to be watching for the break above about 58.35. Then I'm going to be watching the top of the 4-hour rotation zone. And if we get through there, and especially if we get through 58.80, then virtually the same targets as the double because we're into a clear path move. And you notice a breakdown area is at the second target of the double, which isn't officially a double yet. And the final target of a clear path move is right at the third target. So targets the upside, I'm roughly looking at around this 58.80. You can still use, I just use it as a stop rate. It's about 59.29, then 59.50 area, 59.52, and then right around 59.80 to 83. So we're taking a look at the ES percent B sell on the we're not going to go through that. It was a move. It was definitely a move. I did mention the percent B. By the way, if you want to know the percent B rule, or at least a quick overview of the rules, I laid them out on Futures Edge yesterday. Also, I laid out the buy rules. So that's what I'm watching for here. If we continue to push down below 57.77, 57.60, which takes into stronger double bottom potential, then it's 57.44. We break below that, 57.19 is key. If we put up the reverse harmonics, look at where this cluster is. We have an area, let me raise this. Here's the 50% from the whole. That's a big 50% key retracement, and right below that is the harmonic projection. So between 57.11 and 57.19, if we did break below yesterday's low, not necessarily expecting to, but that would be the next very strong area I'd be watching. I saw a news headline last week, and traders are in no man's land after the latest conflicting sentiment data. I disagree. Yeah, volatility. And what did I mention? What did I mention how to structure trades? I said you got to structure trades with long vol in mind. Long vol. And have we had it? We sure have. We sure have. And I don't think we'll get dip downs in volatility again, but I think we're going to get shocks and surprises in volatility. Also, why these traders, and they should say invest, you know what? People can't deal with a pullback market. People just want it to keep going up, 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 up. That's why they're also saying traders are in no man's land. You know what? Pullback markets and bear markets are fantastic sometimes for trading. It's just the investors are to buy the dip people that get ruined. So what are you saying? If the market's not going up, it's in no man's land? No, it's just, it's a different kind of market. So that's where we sit on the Qs. It's not anywhere close to a potential double bottom yet. If it trades off in the morning, it has to get below 20,239. Other than that, very key level I'm watching into the open is 20,550 area. If we can sustain above that, it can then, if it gets above the 4-hour rotation zone, it's into a clear path move potentially also with a final target of 21,000 for that. Then the next target, if you get a real rip your face off rally anytime this week, or if it continues, 21,330 is the next key area. So that's where it sits right there. Again, how I'll be structuring stuff if we sell off, even if we sell off with some ISM numbers until Trump's tariff or Trump's Canada and Mexico announcement, which wasn't he saying he put it on because the fentanyl flow's still going? If he takes them off, like, was that just solved in a day? No, this is all a bunch of BS. 20,321 is the next key level for on a closing basis, and 20,239 takes in a potential double territory, and then you have about 20,150 to the downside. The Dow. Now, the Dow has, you see here, clearly entered double bottom territory, so we don't even have to do a hypothetical on the Dow. If it closes above 43,151, it's in double territory with the targets. Was a triggered double with the targets of 43, roughly 43,5, 43,490, 43,5, 43,652, 43,819. All right, trading right at the 200 moving average right now. If it were to break yesterday's low, again, the next key area is 42,100. The Russell, remember, finished the double pattern finally. Finished the double. If you're looking for a new micro double in the Russell, it has to get below 20,669. Other than that, and the trigger point with that would be for the double would be a close above 2116.7. Other than that, if we don't form a double, I'm going to be watching for the move to get above 2112, and then into a clear path move with a major breakdown zone of 2136 area, which would be, I would look to raise a stop, and then a full target of 2181. The VIX, still elevated. If we want to really sustain a rally, watch for a drop below 22 at this point. The DAX, still trying to hold up here. This is not technically a double top because of all this price action in between. But if we start breaking down right below 22,200, watch out below. The DAX, if it breaks the upside, still 23,450 is the next key target. There's not a fantastic setup right now in the DAX. The notes, coming back to the rotation zone, I'm going to be watching for a more significant potential topping pattern to come in here. We've now traded back to the daily rotation zone and starting to rotate back up. So I'm going to be watching for a more significant topping pattern to get put in place here. There isn't one just yet. Other than that, the trend still does remain up, but it's having trouble at this very key resistance area. You see it gapped up above that, but closed back below it. So I'm going to be watching to see how it reacts in here. Yields. Again, if we reverse on yields, it would be a percent beat buy if we close above yesterday's highs. We've already tapped the rotation zone, so it's going to be tough to get a decent reward to risk, but this is coming out of oversold with divergences. However, if the yields turn back down and close below 44.15, a yield of 4.15. Then I'm watching for it to drop closer to 4. Dollar index. Okay, so today's price action took the channeling double off, and now it's just a double with the next target. We went through the first target, so the next target is right about this 104.10, which is also, if you look here, look at that, prior key breakout zone. So 104 area is a magnet price then, and if it continues below that, it's down to closer to a prior support level here, just below that. So 103.28 is the technical target. Okay? So there is no bullish sign yet on the dollar index. It's continuing to trend lower. Crude. We still have, this is the only thing that can make me bullish. Let's make sure it's still valid. Yes, it is. Still valid. Long way off from potentially triggering, but that's the only thing that puts me in bullish mode. Otherwise, it just keeps trading on lower. Yesterday, look at the close. Look at the close. Just below the 62.5. So technically, if this double doesn't trigger, we still have the minor price is 66.07. The major price area is back to 63.84. I'm, though, paying attention to an area between them. An area between them, there's some significant price action around 65, 65.30. Gold, not in potential double top territory. That's the only thing that would put me into short-term bearish mode. We're not quite there yet. What else have I missed? Yeah, what was we did talk crude yesterday. Yes, we did. You'll want to go watch that show. Support Futures Edge. Yen. Nothing fantastic just yet. Nothing fantastic just yet, besides it keeps trending lower. Now, again, the next level is 146.80 area on a closing basis. But this is got waning momentum down here. We're getting a multi-divergences down here. So I'm watching for some kind of bottoming setup, but not one yet. Until then, the trend is still down. Euro broke out clearly. Broke out clearly yesterday. Closing above very key resistance levels. So, in the short term, I'm watching 108.25. 108.25. Spiders, again, confirming the double top, but again, this needs a weekly trigger. Not, again, we don't know what's going to happen before the end of the week. Other than that, on any rollover play, it would be to the gap fill. To the gap fill yesterday, 576.86. Very key resistance now is back at 583.80 area. If we do roll down into the open, you can watch for a potential little mini double bottom on this also. The Qs, same thing. Little gap up. For the gap fill, it would be to yesterday's close, 495.55, and then watch for a mini potential double bottom. Other than that, if these mini double potential bottoms form but do not trigger, we are still in bearish mode. Bitcoin. Remember, back nearly to the rotation zone after dipping down. Significant buying pressure here. Significant, and look at that. We have a double bottom. So what's key? I think I talked about this one too on Futures Edge. Close above 95.128. triggers it, and I'd be looking at 101,971 and 105,534 as the targets, but this is not triggered yet. For all the Bitcoin aficionados. Okay. Tesla in the dumps still. I can't wait for their quarterly delivery numbers, but that's not for 3 more weeks. So, again, clearly broke yesterday below the 200, but this is an area now testing very major support right in here. You see, tested, then breakaway post-election results. So this testing here, would not be surprised to find a bounce in here. Pay attention to yesterday's high. Yesterday's high is key because for a percent B. NVIDIA, overall, again, I'll be watching for bounce plays and then still rollover plays in NVIDIA. Broadcom, we have earnings tomorrow. Trading finally returned to the 200. Pre-earnings and a very key support zone. There's no fantastic setup just yet, but other things. Amazon returning to its 200. That's why I'm more focused on some kind of bounce play coming up. There just needs some trigger. Just needs some trigger. It'll probably be something Trump says. All right, because we had Amazon also returning to the 200. Some of these key stocks have returned. Now, I'm not expecting long-term bounces. I'm expecting potential just bounce plays and then rollover plays. By the way, another interesting thing, let me show you this. We already talked about this. Again, I'm now watching for the pullback. It did not manage to close above the neckline, so it's confirmed, but officially not triggered yet. Watching for the pullback on GIS. We talked about that. BLDR. Here could be something interesting if you like playing things potentially to the downside. BLDR is a home improvement chain, builder's first source, directly tied to home building. It is confirmed. I'm watching to see how this week closes out to see if this weekly, but this is something I'm going to be paying attention to for the next few months. This is a massive potential double top, something to keep an eye on, if even as a proxy for homes. So that's another interesting thing. All right, what do you have here, Sterling? I don't know if I missed anything else. It was tough to follow with the chat today. I just wanted to get the information out. OKLO, have a 4-hour day. No, I would not trade. I just trade this as a potential breakdown play with the target being the 200 area, and this, I would not. It's because this is an extended base. Let me show you why. See this extended base right here? So you'd have a shoulder, flat neckline, but the targets are all beyond here. If you do the targets on this, okay, roughly, here's your flat neckline. Then if you look at the targets, look, see how the first target's even below this extended base area, would not use it. And this first target just reinforces. So my target would virtually be that area. So on any bounces, I'd be looking for breakdown rollover plays on OKLO. All right. Now, to flip this around, let me get my magnet back on. Because again, vertical up, vertical down. The very key area, look how that lines up. Look how this lines up. So, on any rollover shorts, I'd be looking for a close below 25.50. That would be a first target area, at least to lower a stop from a bearish perspective. Then look at the 75% harmonic, the prior support base in the 200. That would be a very key target for me, even before 1207. So I'd be watching for returns to rotation zones and then rollover plays. All right. So that's where we sit. Let's just peek back at the S&P for the open. See where we sit. Still holding above that 57.77. So that's the little key thing I'm watching going into the open. Should we get any selling pressure in there? I'd really love this to set up a double. The market might not cooperate just because of the probabilities of the double. Other than that, I'd have to look at those other key levels and watch just breakouts above key price action and the rotation zones. With that, again, I hope I didn't miss anybody's comments that were important. I shall talk to everyone tomorrow. Bye for now.